Thank you, Mr. Chairman. I have with me Danielle Boyd, our attorney at the lottery, and Nikki Orcott that's down here. She's head of marketing, and also Paul Barnett. Paul's our deputy CFO. It's our pleasure to be here today and share with you some information. And before I start, Mr. Chairman, I want to say that at past meetings we've presented you with a progress report that has a lot of information in it. We can still give anyone one of these that didn't get one. Also, that we presented a few months back a West Virginia Lottery overview, and it has a lot of information and charts and things of that nature in it, and it's online. It's on the legislative website, so you can go on and access that. And so to keep things fairly simple, we're going to do a kind of a different presentation. As I think most of you know, lottery is a non-appropriated agency, and that means that we don't receive any appropriated money, and we have to sell a product before we can even make payroll. And so, and all the dollars that we generate at the end of the year, we turn over to the governor to recommend an appropriation, and you appropriate. So we start over every year and in generating dollars. We have, like I said, to the chairman asked that we just show where the money goes and how it's generated. And we have three distinct areas of revenue producing. It's the instant tickets, we call in our online, which is the traditional lottery as we refer to it. So we're going to show you that, and then we're going to show you our video lottery and our LBL and table games. So if you look up here at the slide that we have before you, we generate about $103 million of instant ticket sales, and we've given you also a handout there that I think you can see those percentages up there in the pie chart a little bit better. But of that 103, that 7% goes to the retail commissions, and so we provide those to the mom and pops and the places all over West Virginia that sell our product. And we rank in our products in the top 5 or 7% in most of those type establishments. In the prize accounts, we pay out in prizes to the customer about 68.3. Our administrative dollars out of instant ticket sales is 14.5. We provide money for the Veterans Fund, and as you can see there, that the net then available is about 12.8 that's available for appropriation. Now, we also put on their administrative surplus, and you may say, well, what's that? Of our 14.5 that's available to us, we have turned back 4.3. We're very frugal in what we do at the lottery, and we're going to show you that in most cases we turn back some of our administrative money every year. And now you say, well, maybe you can do without it. You get that money anyway. So if we don't use it, it comes into appropriation as a surplus, and you do your supplemental appropriations with that. So you get that money if it isn't used. You want to go on? Okay, when you look at the online sales, and online sales is Powerball, Mega Millions, Hot Lotto, things of those nature, Daily 3, Daily 4. And we show you up there that the sales from that $77 million. And we, of course, break that down, that we pay 5.3 to retail commissions. We pay 38% on prizes. Again, we get the administrative allowances that we get there. So we have net available of $22.5 million, and again, we returned $1.1 million of that for your appropriation. Okay, the next. So we show here that on the video lottery, racetrack video lottery sales, the tax rate that we have is, I need to get over here where I can see. Of course, the tax rate is about 58%, and we show you here that out of the 558 million that we generate, out of that we mount played, of course, is a lot more, but the net comes out of 557. We show amount played and amount won, and then promotional play, and that's how we arrive at the net. The casinos commissions amount to 235.8 million, and the subsidy that they get is capital reinvestment is a 5.8 subsidy that's provided. The racetrack pension funds 4.5. Modernization money that I'm asked about quite often is used to be 10 million, was cut by $1 million, and is now $9 million. So that leaves the racing subsidies then that comes out of that. And the racing subsidies 36.1, the Greyhound purses 7.8, the Greyhound Development Fund is 3.5, the Thoroughbred purses is 21.3, and Thoroughbred Development is 3.5. And so then we have the local governments get 10.4, and the administrative dollars that the lottery receives is 6.8. And the net available, we show down here that we expired of the 9 million that the casinos get, that 3.2 was returned, that wasn't used. And the administrative surplus, again, was $1.8 million that we returned out of our administrative dollars, and decal fees is about $600,000. Next is the limited video lottery, and you know that by the bars and taverns and that we have, and the distribution of that, it runs close, it's been running close to 400 million, but it's down to 373 million. And again, we show you the amount played, the amount won, and that's how we get to the 373. Retail commissions that we pay to the retail folks is 182 million. Local government gets 7.3. Lottery gets 7.5 for administrative expenses, and the net available then was 175, and the license fee that we collect is 9.6, and we return 1.6 in administrative surplus. If you look at the next page, it's the table game adjusted gross receipts, and the adjusted gross receipts 134 million. The casinos commissions on that's 87.2. Table tax is 46.9. And the subsidy is 1.2, and that's of a pension fund for the benefit of the track employees. The racing subsidy out of those dollars is the purses is $500,000, the Greyhound Development Fund 400,000, Thoroughbred purses 2.5 million, Thoroughbred Development Fund is 2.0, and local government gets 13.3. And the lottery administration expenses is 4. And the net available is 23, and we take in licensing fees $10 million. If you look at the last page, it's the distribution of $10 million for the Greenbrier Resort. Part of it, you can see the tax rate's 44%. We give you again the amount played, the amount won, and the promotional play, and the gross terminal income, $4 million, adjusted gross receipts, 5.7, and so the sales are 9.8, and the commission to the Greenbrier is 5.4. The subsidy is 1.2, and again, since the Greenbrier did not have horses or dogs, what they did is they said, well, that they would return a certain amount of money for the employee health benefit fund, and that amounts to that fund there you see of $1 million or $1.2 million, and local government gets $400,000, and $500,000 goes to lottery, and so net available is 2.3 from the Greenbrier fund. Licensing fee is $500,000. Mr. Chairman, I can go into other details, but we also provide you with usually a bucket list. If we can make the new bucket list available to you. I know that one up there, and the little one you got's kind of hard to read, but we can give you a copy this size that we'll get up to you, so be a little bit easier to read. Now, you took action last legislative session on 101, and that changed a lot of the statutory requirements and dropped those buckets down. And so the big yellow box that you see in the right-hand corner down there, a lot of that has come from up what was statutory, and a lot of it was moved down. Those buckets in the green that you see are still statutory. And that first bucket, if you're trying to read it, is local government. And local government in that bucket gets 31.4. The historical resort, the Greenbrier Fund, as we showed you, gets a little over $1 million. The thoroughbred purses get 23.8. The Greyhound Development Fund gets 3.9. The pension track funds gets the 5.7. The thoroughbred development funds 5.5. And the Greyhound Purse Fund 8.3, and the Track Capital Reinvestment Fund is 5.9. Now those have remained statutory, and we just, as we raise these dollars, we just fund those buckets automatically. And so that leaves the legislature in the net revenue before appropriation $508 million. And then it's distributed as we show you here in the bucket list. Mr. Chairman, I'd be glad to answer any questions.